Hi, good morning, everyone. Thank you so much for spending some time with us today. My name is Doug Harrison. I'm the country manager for Dataiku. I'm based in Toronto, and I have the privilege of working with our financial services accounts coast to coast here in Canada and also occasionally down in the US. So thank you so much for joining us today for this webinar. I'm joined by a number of specialists in the space. So Eduardo's part of the Dataiku financial services team. And then we have two special guests from Thinkforces. So Paul is one of the principals and co-founders of Thinkforces, and Mike as well. Thinkforces is a Dataiku partner, and they spend an awful lot of time helping financial services companies with strategy work. And front and center these days, a lot of that strategy work is focused on AI. So we put the session together today to talk a little bit around how financial services organizations are approaching risk management and governance within their overall AI strategy. And we hope that it's a super valuable session for you today. So we're going to kick things off with more of a panel style discussion and talk about a number of topics that we are consistently being asked by our end customers. And then we're going to jump over to some Q&A at the end. So if you have questions, please hold them till the end, and we'll walk through them there. You're also able to use the Q&A tab and ask questions online, and we'll do our best to respond as we're moving along. So this topic is front and center for most organizations that we bump in today in the financial services space. I can't count how many times we're getting questions from companies around, hey, how do I approach my overall AI strategy? And I'd say 6 months ago, it was very early stages for a lot of customers. But we're actually seeing now that the initial success is really starting to roll out with a lot of organizations. We're finding companies, 52% are actually rolling out everyday AI within their overall strategy. They're starting to see that the benefits are real, but they're also seeing that there is a number of challenges in terms of how they actually get there and what it takes to be successful. And a lot of it comes back to how do you manage the risk associated with the AI workloads that you're tackling. Now, we find that there are a large number of use cases, and each one of them present different kinds of challenges and different risk profiles with an organization. So a key part of being able to leverage this technology is to really understand what the risk profile looks like, where it fits into your overall strategic plan, how should you approach rolling this out, and organizationally, what components need to be in place in order for you to drive success with it. We generally find it fits into 3 different categories. Your people need to be enabled to use this technology in a meaningful way. You need to have some kind of strategy in place so that you can take your use cases and workloads and orchestrate them across lots of different potential backend technologies. And they need to be tied together with a centralized governance approach, because again, if you're not able to govern what's being built, it does introduce a fair bit of risk within the organization. So with that, we're going to jump over and kind of treat this more panel style and go through some question Q&A. And I thought I'd kick things off with Paul and talk a little bit about why having a solid plan and strategy around your go-to-market, it should be a key part of any AI discussion that you have within your organization. So Paul, let's kick things off there, and then we can pull others in as we go.
Sure. Thanks, Doug, for inviting us. I think this will be a great session. Talk about it. My favorite topic is AI strategy and governance. I just want to do a quick poll before we start the conversation going. Stephanie, if you could put this up on the screen and have the audience, please chime in. It's related to AI strategy and go-to-market strategy. So can we put the poll up for question, and we can get started on this?
I'm not sure where the poll tab went.
Well, yeah, it's coming.
There we go.
Yeah, so one of the things I'm asking, I think we talk about solid go-to-market strategy. Just wanted to see do you really have a solid go-to-market strategy as part of your AI implementation? So just want to see, do you have one? Are you looking at one? Or you haven't considered yet? So give it a couple of minutes and we wait for our audience to get back to us. And it's great. We're going live. So this is all about Q&A. Make sure this is live. So. And actually, I did this thing on last webinar, and it was a little bit different. So I'm amazed. Like, I don't know if Doug, you can see it, but I think they're all saying we have close to 66% that they all have a solid go-to-market strategy. Because actually, this is interesting because when I did it last time, actually it was reversed. It was 60% no and 40% yes. So I'm glad that we have this. So, and I think. I mean, having a solid planning and go-to-market strategy is one of the critical things that you need to have. And I always say planning is part of this. You don't want to go and start the whole process, especially I work in banking sector and in financial services sector. And it's not all about that shiny object or implementation. It's all about what is you're trying to do. And I always say it's all about three things that you look at when you do your strategies: how, who's going to do it, and what you're going to implement. And the whole problem is that sometimes in our financial services, and Doug, you and I were talking about this before, like you jump on the gun and you just go, hey, I got to implement AI everywhere. And then you go in and you don't have any risk and governance control. And what will happen is that you're wasting a lot of time on the resources. And AI doesn't fail because of technology. I think it fails because we are not layering to the outdated process. I mean, that's the main thing. And operating models, and we all see it. Like we have the old operating models, and I'm trying to fit AI or new technology in there, and that's a failure. And it's not about ambition. It's not all about but it's all about lack of execution, right? And I think planning, when you don't have the solid planning, and you don't have the clear KPIs and what you want to get, I mean, that's the issue. And I always talk to our client, the three things that you look at: why we are doing this, how are we going to do this, and who's going to do it, right? If you get that 3 C's right, that's where you can get a solid planning and cover all the gaps versus execution. But this is interesting. Actually, this poll was interesting. Having a solid go-to-market, a lot of people have that. Doug, you want to chime in on this one? I know what you've seen before. Does that make sense?
Yeah, I do find it interesting that it's reversed around. I've got a strategy for it. I wonder what is driving that. I mean, we often find organizations now are really pushing hard on, we need some AI in our overall strategy. Some organizations don't necessarily know why, but they're trying to build the underlying kind of technology building blocks underneath, and they're kind of approaching it from the if we build it, they will use it and will be of value approach. And then there's some organizations we bump into that have a very clear strategy. Here are the business drivers. Here's the return on the investment. Let's put things in place and get it up and running. So it's nice to see that organizations are embracing it and see value in it at a I'm assuming a fairly high executive level. But I will put it back to everyone on the team or on the call. What are the biggest gaps that we're bumping into? What are the pitfalls? I mean, there's obviously interest in adopting advanced analytics and AI and embedding it into your business processes. But what are the pitfalls that slow down your execution of these real world ambitions?
Yeah, and maybe I can get kick started on that one. I mean, I've seen a lot in financial services. You shouldn't plan. You should plan for outcomes, not pilots, right? I mean, this is the key. I've seen it. Define the KPI early, right? Make sure you redesign the workflows, right? Human versus AI. I mean, that's the main thing. And align incentives. I mean, it was mind-boggling. Actually, I went to one of the webinars last week, and they all think, "Oh, we're trying to do pilots," and you know how it is. You spend a lot of time on pilots, doesn't retrieve anything, and you come in and say, "Oh, we didn't make any headways." And one of the things was saying, "Hey, studying pilots, just get to the execution and the change management part of it, and start with the strong executive sponsorship." And I'm going to say a top-down approach doesn't work. it's got to be a bottom approach. I mean, if your CEO or VP comes in and coming on the top, oh, we got to do AI, and hey, playing with Microsoft Copilot is not having AI implementation. And I think the biggest gap is that the strategy must be defined, and you may want to make sure you have the value out of it, right? You don't want to spend time on something that doesn't create value. So, I mean, this is my opinion, but I open up to Mike and Eduardo if you have any other thing you guys want to chime in this one.
After you, Eduardo. Oh, okay, I'll go. Yeah, I think this is expanding on what Paul was mentioning there. While he's recommending the bottom-up approach, it is very important that there be an enterprise-wide strategy in this. Otherwise, what happens typically is you get siloed approach to implementing AI, may not be aligned, may not be using the right tools, may not be looking at the overall corporate direction and what the outcomes are. And typically, certainly in the wealth management space and the credit union space, other financial institutions, it's all about the end client value. So the investor, the member, the customer at the front line, what is it doing to enhance their experience with the organization, and who delivers that? Yes, you can have agentic AI coming to play more and more in the actual interactions with the clients, but there's a lot to consider in terms of the orchestration. You will hear that term come up a lot as we speak. It's very important to have all aspects considered internally, operationally, human resource aspects, training, all aspects of the company, and particularly the governance side of things, because there will be a lot of responsibility as this develops, falling upon the board, the senior management of the company, as well as the individual advisors. And we'll expand a little bit more on that as we go through this. Eduardo?
Yeah, sure. So based on what Paul was mentioning, also on what you just said, Mike, on the governance and on like the people side, I think that historically what we were seeing is that there were a lot of initiatives that were run by the IT department or by executive sponsorship. And what's interesting today is that companies that are actually succeeding realize that is the people, the business, the first line of defense that are integrated in the flow, in the process from A to Z. And when they do that, and as Paul said, when you define a KPI of success with the business and you coordinate that success with the IT from an orchestration perspective, and you have the right governance in place, you can do a lot of big steps and you can succeed but far better than if you just run the initiative from one single team. So I think it's a very good point to ensure that the three elements together go all along to get AI going and analytics going in your institutions.
I kind of hear two different things. So top down, you kind of need executive level support to be able to make investments in the underlying infrastructure components and the technology stack, and to have alignment there. But it sounds like you're also saying in the same breath, we need bottom up creativity around what are the use cases and what are the high value AI use cases that are coming up that the team actually wants to focus on. Can we talk about how those two things kind of interplay with each other?
Yeah, I think you're quite right. Like, we're probably saying things which sound like they're disparate, but I think what Paul's getting at is the individual use cases for a particular division within an FI need to be well developed by the actual business owners, the line managers in there, but it has to be done. It takes two parties to dance in there. And essentially, it's having the senior management having the oversight that they should on the activities that are being performed to be able to bring that all together. Otherwise, you're going to end up with a siloed approach. Paul, I don't know if you've got anything to add to that.
Yeah, absolutely. You just read my mind. I think, Doug, to summarize, you need a clear separation of execution and judgment and accountability across enterprise solution. What I mean by that, even if it's a top-down or bottom approach, you need a new leadership capability, which is, I call it agent manager or change manager, right? It's all about emerging to look at the legacy infrastructure, which we know all the banks are, insurance companies are involved with. And, it's all about that fragmented data across enterprise, which Dataiku does over well. So create that value, right? I think that's what you want to make sure those pilots doesn't struggle and they can change and make an impact and make a clear ROI for this. Does that make sense? Is that what you
for me? I know we've seen it in a lot of organizations that kind of agentic has changed the game a little bit.
Exactly.
So the level of accessibility of agentic use cases now has really broadened, and every software vendor on the planet now has an agentic component to their software stack, and we've all kind of become agentic experts just because the software is accessible to us and it's embedded in the software suites that we're used to working with. But it does actually, so it gives the appearance that it's very, very easy to adopt and very, very easy to use and solve complicated problems with. But it gives you a false sense of security, because usually if you want to have it as a repeatable, scalable process that can be exposed to other teams within the organization, it does need to have a level of rigor wrapped around it. Like, as soon as you have an agent that starts responding differently to different types of queries that are being passed into it, people quickly lose confidence. And there is a discipline around managing the way that backend data and the science being applied to it needs to be managed. So I think that's the kind of yin and yang of the discussion. The creativity comes from the business, but you also need to have the correct infrastructure in place to be able to properly manage the back-end data, the monitoring frameworks, as well as the governance model.
Absolutely. And I think you key on it, like governance and risk control should be part of this. Beside that, I mean, I call it wild, wild west, right? You just got agentic AI just running around and trying to make it speed it up, right?
Yeah. So I know, Eduardo, you get to spend lots of time talking to our customers around kind of risk management frameworks and model risk management. I mean, it's one of your specialties. In the Canadian context, I'm interested in your point of view around how has the OSFI E23 guidelines changed the landscape in Canada, and what does that actually look like?
Sure. So I think it's a very good point, because we mentioned before the fact that a lot of technologies are now available, and we need to govern the risk that the AI agents are bringing to us. If we go step by step, I think that E23 is a good overview of how the SR 11.7 guidelines were to be declined by different countries and declinated. I think declinated by different countries. I think that's something that's interesting, is that it is coming in enforcement, while at the same time the OCC just released the updated SR 11.7 in the United States guidelines just a couple of weeks ago, and they are actually less strong in their approach to what they used to be, and that's very interesting. I think that E23, from a very practical perspective, is giving us a view of the scope of models that are under the model risk management umbrella that is very broad, and hence I see clients having a step-by-step approach in the implementation, where they say, historically, for example, in Europe or in the United States with SR 11.7, they wanted to ensure that they are all regulatory impacting models under that framework. And I think that that's a very important starting point because of their impact. And then they wanted to have everything that could impact their clients under that framework. And now E23 and other worldwide guidelines are telling us you need to add AI methodologies, models also under that umbrella. And the question is, how do we shift the model risk management approach from the classical perspective to models that are actually live? And you mentioned that element of execution. The agentic risk is exactly the difference, is a live risk that depends on how the agent execute tasks and not just how the models behaves itself. So I think that for clients is a first step to ensure that the most critical regulatory models are under a right framework. The second one is ensuring that they map out the impacts on clients that those models have. And then including AI is now a key, and it has to be done with a perspective that is a little bit different on how the risk lives in that methodologies.
Mm-hmm. Yeah, I think historically the model risk management was a relatively well understood discipline. Models were deterministic, and you could look at them and you could wrap your arms around them. And you could document the hyperparameters and the way they were set up and the versions that they were trained on. Agentic has changed that a fair bit just because of the complexity of the interactions across agents and interactions with large language models, just because by nature they're non-deterministic. So it's a lot more complicated to kind of wrap your arms around the governance of that. Mike, Paul, how often do you run into the whole E23, bigger picture around regulatory and model risk management frameworks?
Sure. I can jump in there. Actually, I want to answer a question from Richard Clifford, who was posing the Q&A there, just on something I was mentioning earlier about the shouldn't we welcome momentum if a single group within an organization is actually considering AI and want to pursue that, etc. Yes, definitely, it should be supported, the interest in being able to do something that has a purpose, utilizing AI in improving either operational efficiency, ROI, or client expectations, satisfying those. But it also has to be, by looking at one area alone, you risk the siloed approach. And we all know from our experience in in financial services, what that ends up with. You end up with technical systems which tend to be siloed, don't talk to each other, etc. This brings up an interesting point about Dataiku, who are experts in the data management side of things. And typically, a lot of financial institutions may still have some siloed data, which doesn't talk across the different platforms that are going to be using this. And being able to take a data lake type of approach where all data resides in one area and is accessible by all systems is going to be very, very important. And data, which is probably the most valuable commodity, or certainly becoming the most valuable commodity, is going to be very important in this. So having an expert on your side who can handle the data management capabilities is extremely important. And that's why we work with Dataiku on this approach there. So Richard, I don't know if that helps answer your question. Yes, support the single initiatives, but do it within the context of the overall enterprise management. And I know that there's also a second question in there.
Yeah, Mike, I think for Q&A, if we wait, because we can answer that at the end of the session. We have 15 minutes for Q&A, if you don't mind.
Okay.
Okay. So Doug, continue. I think you were asking a question. I really forgot. What was the question?
No, well, as you move into this world where you're building, where we see institutions starting to build lots of different models, orchestrating across different shared backend platforms, how do you come up with kind of a first line of defense, second line of defense, a regulatory or governance framework that allows you to, and I think this goes back to Richard's question a little bit, is how do you enable the business teams to be creative in terms of how they approach things, but not introduce risk to the organization? And that is the big question. We don't want to stifle creativity, and we want to.
Absolutely. I mean, I think actually interesting, Doug. I had a conversation with head of group insurance on Sun Life actually, and the same question came up. Paul, how can I stop governance to stop my innovation? And you know what I said? And I use a Empire Life experience. We actually launched a new online platform for buying a life insurance online way back, and we went through the whole structure. We went through the planning. We got everything going, and you know what? We brought governance and control, actually governance people at the end. And you know what? That was totally a disaster. I mean, it was basically garbage, everything. And you know what? It was basically like, we thought, hey, we got everything on plan, but you know what? Actually, they came up and said, guys, why didn't you involve us early in the process? And because we're putting everything on cloud, we're trying to get every platform, where the data resides, and all this thing came up. And the lesson is, you got to involve whoever it is as part of the governance and control early in the stage. And we do that a lot in financial institutions. We go in and build all this stuff. I know my conversation with the head of group insurance was, hey, you got to give like your legal team and governance people right on the plan before you start, right? And that will take the real risk out of it. And you don't want to do speed with accountability. Like, we want to make sure the governance, the structure is right. And you talk about it. Agentic AI increases the speed, right? It will clear the boundaries, and you want to make sure you have a solution control. And I think you and I talk about this control and autonomy. I mean, that's what it is, right? You want to make sure you use a orchestration layer. Actually, Mike and I were chatting about this, and Mike can chime in on this one, to make sure you define the path and enforce the humans to be involved. And you know what? Get governance or legal team early in the stage. So you know what? If you partner with your sales team and treat them as the same thing, like, you got to make sure they're in there. And I see it, a lot of leading institutions, they embedded and embarrass governance early, and regulatory accountability early, and like OSFI 23, not after deployment. I mean, this is a big mistake that you go in, and that's my conversation was with the head of group insurance and so on. Like I said, don't treat them as a separate entity, and don't do it last in. But I open up to Mike. I mean, Mike and I talk about orchestration, and I think Eduardo, if you guys want to chime in, and we can go from there.
I think that it's a very valuable point when you just mentioned, Paul, that we need to include legal, HR in the process, and the governance needs to include them in the committees and everything. I will make a very concrete example. When you take like a KYC process, that is a very classical onboarding process for a lot of our clients. They will wonder, when they do a proof of concept, they will say, hey, it's amazing. AI allows me to extract information from passports, or it allows me to extract information from origins of fortunes, like wealth origins. And at a certain point, when everyone is happy with that because the business was included, they want to move to the industrialization and make it faster and ensuring that it is deployed across a scope. And they start wondering, hey, but what does it happen to the pictures of our clients in the documents that they provided to us? How is this treated by the AI different models that we included there? And so you need to start a back and forth with IT due diligences and your cloud provider to say what is going to happen to those pictures. And I think that if you have roles and responsibilities planned out, that you can also do, actually, you need to build a gigantic industry around it, because it might be complicated, so it might reduce the adoption and the innovation process. But if you say all along the process, while I'm doing analytics, while I'm doing modeling, and then I move to AI, if you build a governance and a roles and responsibility system that is structured enough, that it evolves over time, you will not need to crash against these walls when you want to put in production something that actually can benefit your organization.
Mm-hmm. Yeah, Mike. I mean, you and I talk about AI and orchestration, right? I think that's the one for control, right? You don't want chaos, right, Mike? I know you and I had this great conversation together yesterday. So go ahead.
And I think that, what Eduardo was saying, there's excellent points in there. I think it's critical to look at what is the OSFI E23 update, which is implemented on May 1st next year, actually covering off. And it's covering off the use of AI and machine learning models in there. So it's adding to that. It's also expanding who has to comply with that. And so it's all in the spirit of protecting the investors, etc., in there, the clients. It's a good thing, I believe, to be able to put the guardrails around in place necessary to be able to protect investors. And there's a lot of logic behind the methodology that they're using in proving accountability. Just imagine, for example, that an auditor from OSFI comes in. If you're not able to prove what the models are doing, if it's a black box, if you can't explain the models, if you cannot say we've got a stream of accountability here in the process, if you're not able to evidence everything that you've got in place around AI, it's not to be taken lightly. It's not to AI is significant benefit and significant change to the way that financial services does business, but it's also a responsibility to ensure that there's an understanding of everything that goes into AI, so it can be explained to the auditors that come into the investment houses, into the banks, into the credit unions, so that they actually know what's going on and can justify decisions that are being made, particularly when it comes to agentic AI.
Yeah, and the non-deterministic nature of agents makes that it compounds the problem a fair bit, just because agents by their nature, as agents interact with other agents, their interactions are defined by human prompts and behaviors that may or may not have been accounted for in the process when the agentic flows were built. So they do become much more problematic to be able to trace interactions and how agents made decisions than your traditional machine learning. Traditional machine learning was, although a fairly well understood scientific endeavor, I know that if I pass in certain parameters, a good machine learning model will be able to respond back and provide consistent response, or at least be able to document exactly how it made decisions. Where agentic, you pass in a request, it's interpreted by large language models across lots of different tiers. So it definitely introduces some challenges for organizations that are embracing this. And the interesting part of it is the agentic kind of storm that's taking the business by storm. Everybody wants to deploy it and use this because it's accessible and it's relatively easy to get immediate results and feel good about them. It's actually the most complicated part of an advanced analytics or AI flow is the agentic front-end user experience. So there does need to be some discipline wrapped around it. The whole discussion around where do you start with your kind of risk management framework is an interesting one. Some organizations we find lock it down and say, thou shalt not use this stuff in any way, shape, or form until we figure it out, and that kind of stifles innovation. Others have come up with a nice tiered approach where they say, let's evaluate the risk and the return on each project. And then for low risk projects that have certain characteristics associated with them, they're only in internal use, they're not exposing customer data or investor data, things like that. Those are projects that we can move forward with very, very quickly. And then ones that are obviously completely new or potentially working with sensitive data, PII data, exposing it to new business workflows that have never been contemplated for, those ones are evaluated as high risk. And then generally you're going to loop in legal and HR and everybody else who needs to provide an opinion, because it's something the company's just never done before. So that kind of staged approach, we generally find allows organizations to drive innovation, but not put themselves at risk in the process.
Absolutely. And I see that with a client that, having AI with the human in the loop, it's the most critical thing, like to your approach. So AI doesn't go haywire. Humans are looking at it and say, hey, does that make sense? And with the bank and financial institution, we have people who've done governance and risk control for a long time, so they understand what is involved. So and I love that, Doug. Yeah, the tier approach. I think that's the best one we see with the clients that have been successful.
Yeah, actually, Paul, you use the terminology "human in the loop," and that's a good point. We're hearing more and more the terminology "human on the loop" in there, which is in reference to the accountability that a human has. Again, going to the wealth management industry and looking at the fear that a lot of advisors have that they're going to be put out of jobs by things like Wealthsimple, and looking at how they operate, etc. Today, Wealthsimple does a lot of disclaimers in what they provide out to the marketplace, so that they will admit, I guess, to the fact that there can be errors in underlying actions that AI may take, but it's only as good as what it's been taught in there. And that's where it becomes extremely important to be able to have a good audit trail, not only on what the transactions have taken place, but also on what is the actual mechanism that has been taught to the AI, the agentic AI, in order for it to act autonomously on certain transactions in there. So one of the other guardrails that's important to know is the ability to turn off AI at critical points. Mm-hmm. So if there's an exception that is generated, does it allow for the human intervention, the human on the loop side of things? But also, can you stop it from performing if there's an exception that's automatically generated, something that looks maybe out of place given a particular circumstance? The agentic AI will bring to the client management side of things the ability to be able to act personally on an individual investor's personal circumstances. That's something that I would venture to say that Wealthsimple doesn't do today. It looks at generalities rather than specifics of an individual investor in there. So that's one of the things that where agentic AI is going to drive the investment business, and no doubt it'll impact the insurance side of things, using the same philosophies, getting much more personalized. The same with client experience, whether it's a high touch individual dealing with a wealth advisor in there, so that the wealth advisor is going to have a lot more time to be able to have those high touch experiences. By the utilization of AI, they'll be able to handle more clients. It's going to be largely good for the advisors. What it may impact, let's be honest, is maybe some of the more junior positions that would have done particular tasks for an advisor in preparation of a meeting or in managing a portfolio. But long term, it's going to level up and elevate the advisor business, where they're assisted by a lot more expertise in what's programmed and trained into the AI to be able to support client conversations and the capacity of the actual advisor. Mm-hmm. Sorry, I didn't know if I went off on a slight tangent there, but I wanted to bring it back to my expertise on the wealth management side there, Doug.
Well, it ties it back to the potential use cases that ultimately drive value. The interesting part of that discussion is that there's potentially lots of different components involved in it. So large language models, traditional machine learning, know your customer profile information sitting in different back-end systems. As we go down the path of building more complicated agentic flows to be able to add value to the humans that are on the loop, I like that terminology. We start to orchestrate across lots of different back-end environments, which introduces an awful lot of complexity. And that's, one question that I'd like to pose out to the team. I know, Paul, Mike, you're avid users of Dataiku. Eduardo, you work for Dataiku, and so you're obviously passionate about us as a platform. I don't want to put this in the context of just Dataiku, but in general, as you look at agentic platforms and the ability to manage and orchestrate across lots of different back-end technologies, why is it important customers invest in that technology? Because we often find people say, I'm just going to hire a bunch of developers, we'll code everything ourselves, and we'll stitch it all together. And obviously you can do that later on. But it also, you got to write a lot of code.
Yeah, I think that they can, there are a lot of answers to your question, Doug. I think that one thing that I am a Dataiku employee now, but I was a Dataiku user on the trading floor before, actually. So what's interesting is at a certain point on what Mike was mentioning, you will want to have different tools and different capabilities that you can reuse easily, independently of your skills level as a business, as a client. And in order to do that, also from a risk perspective, you don't want to create hundreds of different things all over the place, because what will happen is that you cannot control them, and your different businesses, they will not be able to contribute to that very easily. You will need a lot of developers to do that. So as a former Dataiku user, I know that it's easier to build a pipeline for, credit risk facility approval, or like KYC, as we mentioned before, or public relationship management for the wealth management industry, in a tool where you can reuse certain things across projects and across processes that you have built and that you have actually validated and controlled centrally, rather than having a lot of different codes running around, a lot of different tools running around. And at the same time, you will want, on the back of one of the questions that we received, to ensure that you have an integration of the different information that you want to use. You want something that is agnostic to the different clouds out there, and you want something that you will be able to leverage those information from and connect to them very easily without wondering what is the technical burden in building those connections for us, so that I don't feel free in going with Google, in going with Amazon as a tech stack, because I need to build all that connection. So once you have something that allows you to do everything more easily, as a former developer, I think that it's far more beneficial and you feel less burdened.
Yeah, and you know what? Question, and I know we're almost getting to the top of the hour. Build versus buy, right? Does it make sense to build it inside? And Eduardo had a great point. You build it, you came up with all the silos. I've seen it so many times in the bank, especially CIBC Scotia when I was working there. And you know what? And then people are not talking to each other, and you end up paying resources and all that. And you know what? If you have expertise like Dataiku or others that can do it faster for you, cheaper for you, why you want to do and build it inside, right? Because you know what? You will get there sooner. You get where, and my background is accounting, is all about return on investment, right? At the cost. So what is your ROI? Are you spending the time on this? And you know what? This is a strategy thing, build versus buy, right? I mean, you have to evaluate it. And I think sometimes it makes sense not to build it yourself, because you can bring experts in. And to Eduardo's point, you get one centralized location. And the beautiful thing with Dataiku is it can sit on your platform, and you can work everywhere, right? So, I mean, that's where it is, right? And I think that you get more return on investment. And you know what? You don't tie up your staff, and they can focus on something else that is more valuable instead of going to IT and wait for a long time to get that implemented. So, I mean, that's my take on it.
Yeah. So I know we wanted to leave some time for Q&A, but to close off this part of the discussion, I'll put it out there. If you had to do one thing to kind of help your organization drive the adoption of advanced analytics and AI tech but minimize risks, what would that be? I'll walk through each of you. Paul, why don't you go first?
Yeah, and I think we talk about this planning, and I think Stephanie, I have a slide on top-down approach versus bottom-up approach. If you want to put that up, it's all about building that strategy, and it's all about. Doug, you and I talk about this. Top-down will not work. I mean, with my experience, it's all about optimization. I want to make sure that you have tackled the most important or lowest run first, and that will accelerate your transformation, and that will get you to transform to the next level. So then you can leave the high risk information or opportunity there. But what I seen with the client was, and actually I was we're talking to the clients in US and Canada, I mean, you need to make sure that workforce is augmented, and you want to start with something that will make an impact. And I would say plan. Like, before you go and execute, it's not all about the shiny object. Sometimes I told our clients, hey, you don't have to go ahead. If you don't know what is your return on investment is or the cost is, let's start with that. So this is my takeaway, guys. If you want to take a picture of it, put it in your office. I mean, this is an approach that I work with a lot of clients. And, that will accelerate your transformation. You make your AI or implementation easier. And, around this, you want to put your governance and risk early in the process. So that's my advice to everybody, if you want to start with that.
Perfect. And Mike?
I would say the key word for the day is orchestration. Essentially, that's the main thing. Establish early on from a high level exactly what it is that the organization is trying to achieve overall, how they want to be able to address the customer needs, because that's where essentially all comes into play. But to earlier points made, not stifling the innovation desires of single units, but making sure that they're aligned overall with the enterprise. So orchestration is a key element to all of this.
Okay. And I think, Stefan, if you have a slide on orchestration, if you want to put it up, I think that we were talking about this. I think that's a good slide for people. I think it was no. I think we had one in there. Anyways, sorry, jump in.
Yeah. So orchestration across lots of different technologies, and then people and teams. And then Eduardo, put you on the spot.
Yeah, sure. So I think that is about not being identifying the right processes that you feel that can benefit from the technology improvement that we have. Technology is there. We don't need to be scared of saying sometimes I do not want to use AI. And sometimes I want to use just models or analytics because I need to just access my data and clean them properly. So I think that being able to ensure that the processes are well identified and the use cases are well identified independently of whether there is AI inside them, and of course including your business all the time, and ensuring that your governance is properly set up, and as Mike said, that the orchestration layer is there.
And this is a perfect slide what I was looking for, which is actually tells the story about people, orchestration, Eduardo, and governance, which is, we all talk about AI success. I mean, if you get those three things in there, I think everybody's golden, and they can implement AI implementation across the platform.
Yeah. So it starts with creativity of business people, moves over to being able to use advanced technology and orchestrate across whatever platform that may be in place, and then have a centralized governance and compliance framework so that that you can manage whatever's being built. And if you get those three things right, generally you will have a successful approach. So I know we wanted to leave the last 10 minutes or so for Q&A. I know there was one question that came up. Do you have any plans for financial crimes, analytics solutions, or modules? I can answer that one from Dataiku's perspective, and the short answer to that is yes. We actually have an industry solution that we've created that focuses on fraud detection and anti-money laundering type use cases. And we've actually created an agentic framework that sits over top of it that allows a financial crimes analyst to go in and triage suspicious events very, very quickly. So instead of having to go into a myriad of front-end dashboards that are showing you the transaction level details, you can go in and actually interact with an agent and ask it questions, and it will go and find and look up the transactional level details, but interpret those details in the context of your internal policies and guidelines, and then provide responses back in terms of what the appropriate next action should be. So the short answer is yes, we're definitely seeing that financial crimes, anti-money laundering, fraud detection type use cases are benefiting from agentic, but it's using a combination of traditional kind of business rules, machine learning models, and large language models to help interpret the stream of data that's involved in a suspicious kill chain across a specific set of financial transactions. Any other questions out there?
Yeah, so Chuck, actually, JD had a great question. He's asking about innovation trends, right? How innovation outpaces governance and control. And his question was, how you build a centralized framework as part of the business team to keep experiments safely, right? What he means by that, with agentic orchestration, we know is you created a fully decentralized and risk inconsistent across the organization, and you create a shadow IT. So how you address that? And I know this is Eduardo's specialty and Mike, so maybe you guys can tackle this, and I can put my input on it too. So,
yeah, sure. I think that what's interesting in the question from Jonathan is the part where we say we don't want, do we need to have a boundary between centralized AI solutions and decentralized champions? I think that we don't need to do that. We need to have something that is well organized, yes. But at the same time, the proof that we have with our clients is that, and as you mentioned before, Paul, the bottom up or the top down approach, the bottom up approach is if a champion can really well identify use cases and is able to drive that innovation, that will prove success. From a top-down perspective, it will be a good ambassador of saying, hey guys, here is something that is valuable for us, and identifying what is valuable and giving that champion team the tools to ensure that they can experiment while keeping things secure and governed and controllable and auditable. It's the key, because people need to try things with respect to their day-to-day activities and processes. And at the same time, IT or a central team needs to be able to control what's happening if they want. And so I wouldn't, to answer Jonathan's question, I wouldn't take away from champions the possibility to try things through a platform or through an orchestration layer, whatever kind of technology. I will leave that it's key to leave that to the business.
Can I'll inject a couple
sure.
points on this, just because it's a great question, and it's kind of that chicken and the egg discussion. How do you drive new techniques and into the organization if nobody's had a chance to really figure out whether there's value in them? I think one of the first things is there's a big difference in the world of agentic between third-party agents and components that are built in and deployed as part of the software stack that you may be working with. So if I'm a financial crimes expert or someone that's working in wealth management, most of the software components that you've got are showing up with agentic components built into them. And because it's software that's currently deployed and managed within your organization, someone's already made a decision about whether it's appropriate for use and whether it can be governed and controlled. So start using them. It's a new technique for going in and interacting with those backend processes, and you're using human language to be able to interact with your backend business processes, and that's low-hanging fruit in my world. When you're talking to organizations that are saying, we're rolling out AI to all of our users, I always ask the question, are you rolling it out for personal productivity gains, or are you rolling it out to do something that is going to be meaningful and big across the organization? And you need to be a little bit careful, because the personal productivity tools are good at making people feel good about using AI, like, hey, it's generating emails, it's doing meeting summaries, it's helping me organize my calendar. There's a lot of kind of interesting use cases there. Upload documents and get it to summarize them. Like, they're high value from a personal productivity perspective, and it's a great start. But oftentimes those use cases are very, very hard to scale when they've been initially created in a personal productivity tool. So You need something that sits between the personal productivity tool and the third-party agent where, as Eduardo was saying, you're giving people an environment where they can have access to sample data sets, they can have access to new technologies and new models, they can try out interesting ideas to be able to prove out that there's a value prop for it.
Mm-hmm.
And if there is a value prop, you need to be able to quickly hand it over the fence so that operationally it can be deployed and monitored and managed properly. And where we find a lot of organizations are struggling today is that piece in the middle.
Mm-hmm.
Enterprise agents that a business unit has the ability to create. Oftentimes organizations are going, well, I gave you, and I'm not picking on Copilot or Gemini or any of the other personal productivity tools, but you have that, go work there. And they're going, well, it's hard for me to create a scalable operational process in those tools. So the short answer is, you want to be able to use it as a repeatable, governed process. The answer, we're not currently equipped to do that. And that's what's driving people down the path of shadow IT, where they're just basically spinning up third-party platforms because they're accessible and relatively inexpensive. And that drives all of this innovation outside of your environment, and it creates a giant mess for you because it's hard to bring it back in. Just basically anything that's been created that needs to be rewritten and refactored in order to be deployed on your stack. So
Yeah.
It's trying to find a happy medium where you've got a tightly controlled sandbox area where people can play as a coder, non-coder, or full coder, but then once they've driven an innovative idea, be able to hand it over and quickly scale it and operationally manage it properly and govern it properly.
And if I can interject, Doug, I think you're bang on. I think whoever it is, who's in the leadership, I mean, if you want to avoid this two-tier system or having people spin around, you should map the high volume workflows, right? Make sure you explicitly make sure you separate execution tasks from judgment, key decision making. And we talk about defining AI versus what human owns, right? I mean, if you have that, I think you are already there. And make sure that I think this is the most important a lot of people are missing. Tie compensation or KPIs directly to AI-enabled productivity gains. Like when you have that, I think you will actually kill some of those issues and you avoid that. And you know what? It's all about the change management and leadership. And I think that's where Mike and I spend a lot of time with our clients, that to make sure is you understand that process. And once you have that, then I think you can avoid all that question. But regarding the AI and two-tier system and all that. And great question by JD. It just was an excellent question, which I get every time. So I think, JD, thank you. And I think what JD was asking, I think one of the last one, if you want to address it quite a bit, how you get rid of this two-tier outcomes. I think we address it and make sure the funded group, get a meaningful progress. Like maybe Doug, just if you want to add into it, like how you can make sure that, hey, some group gets funded and some other group don't, and then those have any productivity, right? What do you see with your clients, right? It's a great question. I think, thank you, JD, for asking this.
Yeah, it is an interesting one because we often find, and I don't know if there's folks from IT and architecture on the call, and I hope this doesn't land wrong, but oftentimes organizations are trying to standardize the back-end technology stack that they're running in as much as possible because they want to be able to not have to worry about integrating different stacks and different components together on the back end. In the process of doing that, you start to make decisions around what the economics of a project looks like. And let's be blunt, not all AI projects are created equal. There's always the big bang moonshot projects where you've got, this is the next big transformational initiative for the organization and we're well funded and we've got a great team. And then there's the smaller mundane ones where there's still huge amounts of value, but they're not going to have the same kind of financial backing and project team associated with it. So, automation of tasks and things like that. And one infrastructure doesn't fit everyone's needs. So again, we go back to orchestration across lots of different backend technologies and platforms. I may use OpenAI for one set of problems that we're solving, and maybe I use an open source model locally hosted for a bunch of models because it's more cost effective for the problem I'm trying to solve. So I'll always bring it back to, if you want to have the ability to properly fund different projects, just recognize that different projects have different economics associated with them, and you need a set of components in your backend platform that can solve the extremely expensive problems and also be able to service the cheap and cheerful products that are still super high value, but maybe don't drive the same kind of return and warrant the same kind of investment. Anyways, I know we're right at the top of the hour, so I think we wanted to close things off with a quick offer. So if you're interested in connecting with the Thinkforces team and having kind of a 45-minute consultation to uncover and evaluate the types of AI use cases that you're bumping into, please feel free to reach out, info@thinkforces.com, and Mike and Paul can bring in their specialists to be able to help you kind of guide the discussion. And then, the Dataiku, we work closely with Thinkforces. So if there's anyone on our team that would be of value, Mike and Paul can bring us into the discussion as needed. So again, thank you everyone very, very much for joining in. Eduardo, Mike, Paul, thank you for your expertise and for joining today. We appreciate it.
And there's a QR code. There's a QR code, guys, if you want to take a snap out. It is actually will give us to the page instead of an email. So looking forward to connecting with you. And thank you very much, Doug, for having us on the call.
Thanks, all.